Welcome everyone to Real Estate with Gwen Price, and we're doing our monthly market update. I'm with Trina Tallon, a mortgage agent with Neighbourhood Dominion Lending, and also Lana Watier, my broker of record with Keystone Real Estate.
Good morning, ladies.
So you all survived Thanksgiving, had lots of turkey and all of that?
Oh.
Never enough turkey.
Right, I didn't have enough leftovers. I mean, oftentimes we buy a great big, like 22, 27-pound turkey. It was much smaller, so there wasn't much leftovers. But anyway, it was all good. We had lots of food and it was nice. Yeah.
Oh, that's good.
Yeah, so I mean, the weather's getting colder, but the market is still pretty active. And just to briefly tell everybody, we really, people always keep hearing the headlines that prices are dropping and all of that. But in Sudbury, from August to September, there was really not much change on the average sale price, which is hovering around the 470. From the peak in February of 489, we're down about 4%. Excuse me. So that is not too bad. Listings are up slightly. Sales are down about 8%. But as we know, there's still multiple offers going on some products. There's still interest from different buyers. Sometimes it's investors, that sort of thing. But, you know, even looking, and I started looking now at the, we get access to the home price and index. And again, it's basically saying the same thing. Things are not that bad. I mean, you read the headlines, you think, oh my God, the sky's falling, but it's not really that when we're in the, you know, things are taking a little bit longer to sell, but not unusually long.
So we're kind of going back to, we're not quite there yet, but we are kind of going back to, you know, a normal, you know, balanced market looks like where it's heading, which I think is better for everybody, better for the economy, better for buyers, better for sellers. Everybody is going to be on an even keel. And I think that's fair. I think that's good. I'm looking forward to getting back to that market.
Yeah, we're seeing more conditions in offers, especially people are putting inspection conditions back in, and why not? If you can, why not? For a while.
Well, yeah, and that's very, very important. I know inspectors, home inspectors took a big hit business-wise during COVID. Like the rush was on, real estate was active, but because people weren't putting their inspection clauses in their offers, a lot of people didn't work in this industry. You know, other industries that are tied to real estate because of that. But yes, it is nice to see home inspections going back in. That's a valuable tool for everybody. So yeah, I'm glad to see that as well.
Yeah. So how are things on your front, Trina?
Do I have to actually talk about it today?
Uh-oh.
No, it's all good. It's just riding the wave, right?
Yeah.
And the two of you have been in real estate long enough to know that rates go up, rates go down, rates go up, rates go down. And I'm not, probably should do more reading on this, I'm not sure, but it's the response to the government constantly overcorrecting that causes so much anxiety out there, right? So I'll give you a little example where we're at right now with fixed rates. A 5-year fixed rate for less than 20% down. I still have a couple lenders that are at 4.79, but that'll change by the end of the week. The banks, the big five, are at 5.59.
Wow.
And then I have lenders like everywhere in between, you know, 5.04, 5.14, you know, that kind of thing. So that's with less than 20% down. And then, you know, it just goes up from there. 20% down is higher, refinancing is higher. The prime rate is, we're still looking at prime minus 0.9, which puts us at 4.55 right now for a purchase. And I have to be honest with you, the majority of clients that are in variable are sticking.
Yeah.
And so that's a lot of conversations lately, like, Trina, what should I do? And my response is, well, you need to do what's comfortable for you, but I'm sticking with my variable rate because I know that more than likely in the next 6 to 12 months, let's say, and we all know how fast time goes by, that this correction is going to happen. You know what I mean? So we'll see what happens there. The government's probably going to announce another rate hike, possibly 2 more. The economists are thinking it's going to be about 0.7 total. They're looking at rates kind of staying the same for next year. And then closer to the end of next year, we'll start to see rates go back down again. But it's truly out of the government's hands, really, with what's going on with inflation, which we all know is a worldwide economic factor. You know, some stuff here comes into play, but when we see rates high like this, it's because our economy is so strong. You know, there aren't enough jobs, and people are spending like crazy, which is good for our economy and good for retail and things like that. But I'm seeing a ton of really high credit card and line of credit debt, tons of it. And refinancing, even at the higher rates now, is a lot better than paying the 20, let's say anywhere from, because an unsecured line of credit is probably around 10 or 11% right now. And then credit cards up to like 20 to 25%, right? So refinancing at like 5.79, or if you go prime, just around 5, is still a heck of a lot less than what you're paying on credit cards and things like that. So with rates being where they're at, you know, you look at a bank rate of 5.59, that means we're qualifying at 7.59 right now. Up from just a few months ago, 5.25. That is major difference in affordability.
Oh yeah,
So,
absolutely.
I'm seeing, you know, a lot of, can I still afford this? Can I still afford this? And because, you know, I say in the pre-approval, this is what the rate was when you were qualified at. So if you're hearing of rates moving, but even when rates were not moving last year, I still told clients to always reach out to me with a listing before they went ahead and wrote an offer.
Yeah.
Absolutely. It's just one more, you know, urging to tell clients, revisit your mortgage pre-approval before, because I have had a couple of deals that have fallen apart on financing because their buyer had a mortgage approval, and then when it came time to actually do the application for with their offer, this and this and this, and they didn't qualify. So, you know, it's important with, like you say, Trina, with the rates changing and even little things, the rules seem to change in your industry almost overnight. So people got to stay up to date on that kind of stuff.
One thing that I'm seeing a lot of from all the lenders that I deal with, regardless of whether they're a bank or one of the trust companies or credit union or the B lenders, they're asking for more and more documents up front to actually do the approval. Which, you know, there were only a couple of them previously that were like that, but they're tearing everything apart right now. And it's getting tighter and tighter. And it's because, you know, the cost of houses have increased, and with what's going on with inflation, and people are back spending at their max, like we saw, you know, in 2019 kind of thing. And it's, you know,
well, it's all about managing risk, right? They want to manage their risk. They are taking a risk when, you know, lending against different properties, and they just want to make sure that their risk is minimized and it's justifiable. I mean, every business is like that. You just got to manage your risks. So
absolutely.
When you look
but
at
things
the
are
stores,
good, things are rolling along.
I mean, the people are out there spending money. When you go into, like, I hang out in lumber yards, right? But you go into so many stores and there's lots of people, and they're not just buying small, insignificant things. They're buying big ticket items, and there's truckloads going out the door. So there's lots of money being spent out there, and whether or not they're putting it on their credit card, I don't know, or lines of credit, but there's lots going on. So
just remember, don't make those big purchases until after your mortgage closes.
Please don't go buy a car.
Don't get an approval and then go buy a car, or go buy construction for a house or whatever. Don't do it.
Yes. Yeah, keep drilling that into people, but not everybody listens. And, you know, there's still people go online and get themselves approved. Well, they're not being approved. They're just
No.
putting in some figures but you have to back that up with documentation all the time.
Yeah,
The bank
yeah,
doesn't take
absolutely.
you at your word.
Yeah,
It'd be nice if they did, but no.
Yeah, so,
But I'm not really seeing a slowdown. And this is even with the rates going up and prime rate going up and things like that, people are going to keep buying because people want to own homes.
Mhm.
absolutely. Yeah, I still feel, yeah, really, I've been busy through all these last few months. Nothing has really changed. But I mean, probably some of my younger buyers have taken a step back for now because they were only qualified maybe up to 250 or something. And of course, with the rate hikes, that changed their qualification. But you know, I keep hearing, oh, I gotta wait till the prices crash. There doesn't seem to be that in the horizon. And if that happens, I think we're all in the world the same situation. But here, there seems to be stability. And Sudbury, I find over the last few decades has been much more stable.
Mhm.
You know, and the prices haven't taken the big peaks and drops and that kind of things. It's been a pretty stable place to own a home. So
But
we'll,
Gwen, when you mentioned that price range, and something just popped into my mind, in those lower price range houses now, I'm seeing the mortgage insurers doing appraisals more and more.
okay.
And
Yeah.
I'm thinking it's probably because it's not typical for a house to go for that low a dollar amount, and they want to make sure that they're not insuring a house with issues, right?
And
Right.
that's a good thing you mentioned, Trina, because what triggers an appraisal? If somebody's doing less than 20% down, you know, it used to be just sort of based on whatever, is it still the Emily system or whatever? And they would spit out yeah, that's good, but what's triggering appraisals? Like,
So Emily is CMHC's brand name for automated valuing models. All of the banks and lenders actually have this AVM system, and as do the mortgage default insurers. So a couple different things, like Sagen, for example, it doesn't matter how much, well, first of all, we all know that if you put more than 20% down, the bank's probably back end paying for the mortgage default insurance themselves, right? So there are areas of Sudbury that no matter how much of a down payment, Sagen will call for an appraisal on the property. And particular properties around our post-secondary education buildings that are single family homes.
okay.
That so that's an automatic trigger because they want to get in and make sure it's not student housing.
Yeah.
If they look at the listing online and they see photos and they see something funky in a photo,
Mhm.
like a picture of a stove with a pipe going out the side of it.
Okay.
I know, I see, you all know, you see the pictures too, where you're just like, why are you?
Why are
that
you
up?
posting that?
So things like that. And certain areas, Coppercliff, always, depending on how
Really?
close it is to valet.
Okay.
They want to get in there and they want to look at foundation kind of
Mm.
thing. So but with talking about Emily, the automated valuing is that they have comparables, right, in that system. So if the house, when they key in the address, matches the comparables that they have, like the most current sales,
Mhm.
then they won't ask for an appraisal to be done. But if it's outside of their valuing model, then they'll ask for an appraisal to be done.
Hmm.
So
Makes sense.
all kinds of stuff triggers an appraisal.
Yeah, yeah. Well, and we're hearing it more and more. You're right. Like it used to be, you wouldn't hear it hardly at all, especially if they were in the, you know, putting less down. You wouldn't hear so much about appraisals. But yeah, that's interesting. But yeah, the banks they don't want risk. So
Mhm,
And
mhm.
they're still taking time to get done.
yeah.
You know, it's that really hasn't loosened up very much. So
Mm. Well, good to
Good to know.
know. Yeah, well, I'm still always pretty optimistic about things, and I just basically put one foot in front of the other, and no matter what the market is, you deal with it and you go on, because people do want to own houses, people have to sell, people have to buy, and still putting your money into real estate is a good investment. Over time, it appreciates, right?
Yeah, absolutely.
And Sudbury, like I said, has been a pretty stable market for a number of years. So we don't have those. We're no longer. We like mining, but it's not the be all and end all of everything that's going on in Sudbury. So, and we'll see what happens with our election coming up this fall. And
Oh, come on, we already know.
oh, do we? Okay.
At least in Sudbury, I think it's pretty clear what's going on.
So we'll anyway, we hope for a great future in the next little
Absolutely.
while, and have some positive things going on here, because I like living in Sudbury. I'm born and raised here, and I've lived 1 year outside of this city, but I can tell you as a mother and a grandmother, it's a good place to raise a family. And we have lots going on here to enjoy. If you like the great outdoors, I don't know how I ended up here, because I am not an outdoors person, but people do like it apparently. And Lana, you know, there's access to lots of lakes, and so Sudbury's a good place to be. And
it absolutely is. It absolutely is. We do have a lot to offer.
Yeah, for sure. Well, thank you again, ladies. That's another wrap for another month, and we're heading into we're already almost at the middle of October, so it's,
I know, it's
this
crazy.
year has gone so fast. I find it's just a bit of a blur.
Yeah,
I agree. I
crazy.
just don't even know what happened.
I know.
Again, I think if we went back and looked at this recording 2 years ago, we'd be saying the exact same thing.
Yeah,
Probably.
Except we were in lockdown, I think, 2 years ago at this time.
Yeah, think of all the challenges we've seen. Hey, but here we are. We're still doing good. So thanks a lot, and we'll talk to you soon.
Yes,
All right.
have a great week.
Yeah, you too.
Take care.
Bye.
Bye.